Good afternoon, everybody. I'm Michael Filicera with logicalsignals.com, and this is the Elliott wave update for the NQ for Tuesday, March the 30th. Not much to be really updating today. The market continues to just churn around and not really producing anything, so it remains very corrective in nature. And I'm starting with the 30-minute chart, and I just kind of want to describe some of the possibilities. We are remaining right now counting a triple ABC advance, because it's a corrective wave up, to complete a minute wave 2. And I could call it finished here. And that would suggest then that the third wave, a minute wave 3, of a minor wave 3 is underway. And within that, we're going to be subdividing again into many waves. So if that's going to be the completion, I could start 1, 2, and this is a 3. This is very corrective in nature. And if it ends here and it starts to go down and puts in a low below 12,776.50, then it's going to be able to be considered a fifth wave down to complete 5. And that would be more convincing that we are finished with that corrective move and the decline has picked up again. But here's the gig. We need to see this whole thing begin to accelerate more without the intense buying that has been taking place. And so as long as money in the size that it is moving back into the market, this market's not really going to just continue to drop, because every time it does, the buyers swarm back in. So that leaves the whole count up in the air. That leaves the projection of what's going to happen in the next couple of days up in the air, because even though the intensity of the buying is basically equaling the intensity of the selling, we're continuing to see it move lower right now. So downside, if it continues to move lower, puts in a new low, we're going to be more in tune with the fact that we are within this minor wave 3 down. And we'll count that as it progresses. Upside, we continue to think that if we have to work with our current market, that we might still be in this minor wave 2. And I'm going to put Fibonacci's in there so that we can take a look. And it was going to be here. Well, I'm doing a C wave. Oh, let's try this. And then put it there. And if this, there is one chance that this, oops, good enough. This completed wave A, this then completes wave B, and now we got a C wave up. And if that C wave up is just beginning, here are your levels. I mean, we're talking that this thing could just really rocket and basically almost get up to this high. And that would be unacceptable. But wave C could be 6.1, 62% of this A wave. And if that's going to be the case, then we're looking at 13,017, 13,018, which would put in a new high, complete the whole sequence, and begin the next wave, or here, or here. So we continue to have levels that could can this, put it away neatly, and start our next decline. So we basically have both sides now. Here's upside, downside on, let's quickly put those in. If indeed we're going to continue to drop, we've got a much bigger, well, we can still use this one. Let me go here. Nope. Start, and I'm going to put one there. We're going to go down to there, and then we'll go up to here. And now we've got our downside coming in. Let me open this up to the hourly very quickly so that we can see what we're talking about. If indeed this completed the wave 2 and we're now in a wave 3, here's what we're looking at. Minimum, this thing has really got to start to break down. and it's got to start to break below these Fibonacci levels. Easily it needs to break. It needs to break with speed. I mean, today, it basically broke below 382. That's what it did today and this morning. And then it just rallied back up over 200 points. Well, actually 150. And that's, quite the turnaround. And that I'm not going to be expecting that. Now, actually, the one way that I left it yesterday is that if we got a new low, we'd look for an ABC and then for to careen. Well, that's exactly what's still happening. So I have to leave open, continued the possibility that this is going to complete, this corrective wave will complete. We're going to fall off the cliff and we're going to begin to decline more severely and start to break these levels. And we're going to keep an eye on our moving averages to see if indeed they will support the move down. And we'd be looking for everything to kind of shift around. Like right now in the hourly chart, it is a little bit better. In other words, that the 50 and the 100 are below the 200. Let me see if I can do that a little bit. Yeah. But we still got the 20s there. So the hourlies is really kind of more lining up that it's going to start to go down. But then we need the completion of the or the turning in the other time frames, particularly in the 5. If the 5 and the 1 and the 2 line up, and with the hourly and the 30, we're cooked. It's going to go down. Conversely, if everything lines up, we go up. So that's it for today. We'll see what happens tomorrow. It remains very corrective to me in nature, but we're leaning towards still the preferred count, which is basically telling us that the market should begin to roll over yet again, start to break at least below this level, getting down and breaking this level at 12,717, etc., as the third wave continues to unfold. And the next update will be tomorrow, Wednesday, March 31st.